Welcome to Charts Today. My name is David Linton, and today's edition for Thursday, the 27th of December, comes to you from London. And I hadn't really intended to record Charts Today during the Christmas period, but we've had a big jump in the US market overnight, and I couldn't resist seeing what that meant for the charts, and I thought I might as well share it with you. So, dollar strength is still a theme here, and sterling actually. Is sinking lower against that dollar strength. So we are just seeing sterling still bearish against the dollar on all three time frames and down against the euro as well. So um, we are just seeing that fall across the board. Bitcoin continues to be weak, bearish in all three time frames. But the main event was the US stock market had big rises yesterday. The S&P 500 was up nearly 5%. The Nasdaq was up 6%, and you'll notice that this doesn't actually change the position even on the short-term chart. So whilst these rises are very exciting, it's quite key that it doesn't change the charts. And looking at the Dow, we might argue that we're finding support in the lagging line, but with the other indices already through, it's still not a bullish picture. The Dow, in fact, had its biggest one-day rise ever, over 1,000 points. That's just a touch under 5%, 4.98%. That's the biggest one-day rise ever in the Dow Jones Index in points terms. But and I suspect even percentage terms, but it's not enough to change the picture, which is one of bearishness. And we're seeing the Russell 2000 also clearly bearish. And interestingly, the futures for the US market, we've got 1.5% lower and 1.85% lower on the Nasdaq E-mini. So we're going to give up quite a lot of those gains today by the looks of things. So a lot of volatility, not a lot of volume at this time of year, of course. So it's the market has risen on weak volume, which is never a good sign. Looking at the FTSE 100 index, we've given up early gains today, and we are just starting to nudge lower, and those futures not helping there. The FTSE 250 actually up, and the DAX also now looking weaker as well. So the gains that we saw starting to evaporate, and we saw Tokyo, for example, bouncing up nearly 5% as well. But more worrying still is other markets such as Hong Kong still looking weak, and China still a big worry. I think China has always been for me the black swan last year. Didn't quite materialize in a big way, although if you look at the start of the year, we have gone from 3,400 to 2,300. So we definitely gave up about a third of the market in China, and that is actually really starting to look weak again, testing new lows. We activated a new downside target here, 6% lower. If we set new lows, we activate another one, 20% lower, and we've still got these 30 and 40% targets hanging over us. So still very worried about China for the year ahead, and we're seeing multiple downside targets here, so new lows will be very bad there. The Indian market actually closed up, but nothing like the US, and the Aussie market was up nearly 2%. But again, not enough to take these charts bullish. We're seeing negative sentiment still continuing in the crude oil price. We're still bearish here short term. We did rise yesterday on that positive sentiment, but it's falling away again today, and WTI looking weak as well. So sentiment is generally bearish, and a counter to that is that the gold price is looking pretty strong. We're sitting above $1,270, quite a clear uptrend. We're seeing here that gold really is starting to motor. We've got upside targets to 1,300 and 1,295. That's another 2% higher, and we may well get a new big thrust target off this rising column, so it'll be very interesting to watch. Also really significant, again, no one's really noticing this, and that's my job, is to really bring to your attention the things on the charts that people aren't seeing. Is we had two big upside targets on US 10-year yields to around 4%. Those targets have been negated with this recent move. That's negated the upside buying thrust. That's really changed the outlook for US interest rates, and that's gone off the chart. So for the moment, um, further rises in rates are being discounted now in the bond market, so that's quite significant. And then German bond yields lower, but the bond price actually moving back into bullish long-term territory. Bullish German bond yields were looking terrible, but for the first time in a couple of years, they're now looking more positive. So bonds prices rising, yields falling. Taking a look at the individual stocks, and in fact, we can just start by this data coming from Yahoo Finance. We can just look at the volume here. We see the volume is weak at this time of year. There's no big bounce in the on-balance volume behind this, so it was on very much weaker volume yesterday. Looking at the Nasdaq 100, also on weaker volume. And we did see a little bit of a kick up in early December on the volume on the Nasdaq, but it's still not indicating a bullish picture. And if we look at the Euro Stoxx 600, we see that's falling slightly, and the DAX also. The US futures now dragging down European markets, so it does look like we're going to unwind these rises we've seen. So any chance of a Santa rally slowly evaporating. Just looking at the leaderboard in the Nasdaq 100, we saw Tesla was up 10% overnight, so that was a very big move there. We see that, and that was the best performer. Amazon was up 9.5%. So these are big market cap stocks adding massive amounts, but we're going to see a lot of volatility today. It looks like over the next few days the market uncertainty is so great that we're seeing the battle between fear and greed fighting one another. Netflix was up 8.5%. Facebook, a really bad performer this year, sorry, up 8%. And if we look at things like Apple, they were up 7%, Microsoft were up 6%. These sorts of performances are what are managing to push the aggregate price of the market up 6% in overnight. You need, for a market to go up 6%, you need quite a lot of performances beyond 6%. We can see that there were quite a few. The Aussie market was up 2%, so we see here, but a lot of these moves, quite interestingly, bearish. And in fact, what was interesting in the Nasdaq, we only had one performance to the downside. That was Express Scripts. Yet their chart has been pretty bullish throughout the year. So it's interesting that the one stock that sold off is the stock that's performing really well. Look at that relative chart towards the Dow versus the Dow Jones Index, up 33% ahead of the Dow Jones this year. So really significant that the best performer, the worst performer has actually been one of the best performers this year. So we're seeing the counter trend moves, and in the Oz market, we had some good performances there, driving that 2%. But then on the other side of the coin, moves to the downside here. It's further 5% down. China, a mixed performance, but of course, as we mentioned, we had some really big falls. Sano Electronics down 13%, 9% fall there. That's what's driving the index, these big falls. Hong Kong, again, we saw a lot more. We did see the Indian market, we saw Tata Motors, a really poor performer this last year. They were down 2%. And last of all, looking at the Nikkei, interesting, the whole of the Nikkei index was up, not a single stock down. That just shows the strength of the Nikkei there. But whoa, with the falls that we've seen, it's a small consolation. Looking to European markets, looking at the FTSE 100 this morning again, volume will be thin between Christmas and New Year. Sage is the best performer today, up just 3%. They've had a terrible year though, but we are seeing that relative turnaround. It does suggest a turnaround in Sage's share price, possibly just about to come through the cloud on that medium term. We see these prices live coming in from Yahoo as we speak. And then looking on the downside, we still have got some quite big fallers here. Micro Focus down 5%, AstraZeneca down 2.2%. Again, one of the strong performers coming off. BP still long-term bullish. So interestingly that we are seeing those weaker performances there. Rio Tinto again, strong performance over the last couple of years, but off this morning. Taking a look at the 250, we're just clicking on the top performers. We see here, if you go to the super dry, actually up 8%. And I'll just take that up there if we go that way. Super dry up 8%. That's a small consolation for super dry shareholders, where we've seen a really big fall. Stocks quartered over the year. So we are just seeing, again, counter trend moves here. John Wood Group, 3.8%, but again lower. Still a lot of stocks lower. And looking to the Europe, looking across to the Euro Stock 600, we have got some quite good performances. Sage is in that top leaderboard, but on the downside, we still have got stocks to the downside. Micro Focus there down 5%. And Morphosis in Germany down 5% as well. So we are still seeing a lot of volatility in the market. And whilst it sounds great on the headlines that the Dow Jones was up a record amount, 5%, we're not actually seeing the trends of any of these stocks changing. That's it for today. I may do another one tomorrow if we see big moves. Otherwise, it'll be in the new year. Until then, happy charting. See you then.